Imagine waking up to a global market that's on a roller coaster, all because of the brewing storm between the US and China. That's the wild reality facing investors right now, and it's enough to make anyone hit pause on their portfolio plans. Dive in with me as we unpack the latest twists in the stock world for October 16th. Picture this. It's October 15th, 2025, around 10:27 p.m. UTC, and the financial headlines are buzzing. By 11:28 p.m. UTC that same evening, things had shifted again, keeping traders on their toes. Asian markets are bracing for a bumpy Thursday ride, echoing the back-and-forth chaos we saw on Wall Street. Why? Investors are nervously sizing up the unpredictable ripple effects from the intensifying trade frictions between the United States and China, the planet's two economic powerhouses. Let's break it down simply for those new to this. Trade tensions mean disagreements over tariffs, tech exports, and more, which can spook companies and slow down global business. In this case, futures for major equity indexes, think of them as early signals for how stocks might open. Suggest Shanghai and Tokyo could see some upward movement at the start. That's a bit of optimism amid the uncertainty. But hold on. Hong Kong's futures are dipping lower, caught in the crossfire of this escalating dispute. For beginners, futures are like bets on tomorrow's prices. When they point up, it hints at buying interest, and down means sellers might dominate. And here's where it gets really thrilling, or nerve-wracking, depending on your view. Overnight in the U.S., stocks went through a heart-pounding adventure. The S&P 500, that key benchmark tracking 500 big U.S. companies, you can check real-time quotes at places like Bloomberg, surged as high as 1.2% in a promising rally. Everyone thought, green lights ahead. But then, like a plot twist in a thriller, it flipped. The index pulled back sharply and closed the session just 0.4% higher. What caused the U-turn? Likely a mix of profit-taking by cautious investors and fresh worries about how these trade spats could hit supply chains and earnings reports. But here's the part most people miss. While these swings might seem random, they're often tied to bigger geopolitical chess moves. Is this trade tension just posturing? Or are we headed for a real economic showdown? And this is where it gets controversial. Some experts argue that escalating tariffs could actually boost domestic industries in the long run, protecting jobs at home, while others warn it might trigger inflation and hurt consumers worldwide. What's your take? Do you think these US-China clashes are overblown hype or a genuine threat to your investments? Drop your thoughts in the comments below. I'd love to hear if you're bullish, bearish, or just holding tight.